I'll quickly introduce Ankit. Ankit is the CEO and co-founder of Sciency, with over 12 years of experience in multiple industry initiatives and companies across the globe. His expertise, developed in FinTech, regulatory technology, IT, ITES over these years, crafts excellent results in all categories he spearheads. He ensured the success of Sciency from its inception, winning numerous awards from RBI, the Monetary Authority of Singapore, IBM, Thomson Reuters, the Forbes 30 under 30 to name a few. Ankit graduated from IIT Delhi as a silver medalist in 2011, exemplifying his skills in academics. Before Sciency, Ankit had worked with Essex Lake Group, ENY, and many more Fortune 100, 500 companies in India, the US, and China. He's also helped different ministries and departments in the government of India as a research associate. I think the most important thing that I'm looking forward to, as I said, with Ankit is in the order of payments flow. Enabling flow of trust is extremely important. And the work under his vision and the co-founder's vision that they are doing with Sciency is enabling exactly that. So I'm looking forward to hearing all about it. Ankit, thank you so much for coming over. I'll let you take over.
Shitesh, thank you so much for introducing me and the entire AMA faculty and organization for inviting us. I think people are still coming in. Maybe there were snacks and hence. But there was dhokla? Oh yeah, makes sense. So I'm going to talk about something which is outrightly very boring, regulations. And I think even more boring, financial inclusion, right? So while a lot of people have not come in, but maybe even a show of hands, anyone understands what's financial inclusion? Anyone in the crowd who understands, why RBI keeps using this word, why Times of India keeps using this word? Okay, yeah, I mean, two people, they are totally predictable. So I think I will try and focus on trying to explain why these two things are important. Sciency is a regulatory technology company. So also try and justify why we are doing something so boring in the ecosystem in some ways. And also I think there were a lot of questions around KYC and there were, issues that people have raised, and I think it's so relevant to this talk at least. So the truth is everyone hates regulations, everyone hates KYC. From the bank's point of view, it increases compliance cost. Across the world, almost 10% of entire cost goes in, compliance is primarily KYC. Customers hate KYC, right? Again, somebody was saying 68% dropout of users are during the KYC process. So of course, it's even they don't like it. From a regulatory point of view, there are too many regulators. Like India has, of course, 3 major known regulators, but even apart from that, there are other regulators who kind of you have to align to, even if you need to have a process. And when you're onboarding users, for both bank and the user, it's a really harrowing experience. Any one of you who might have kind of maybe opened an account 5-6 years ago would have known how bad an experience was, or even if today you open a small business account, you know how bad that experience is. So nobody likes regulation. So then the question is, why is there regulations at all if everyone seems to hate it, and truth is maybe even regulator doesn't really like it. So the reason why there is regulation is because of events like this. And I don't know how many know FTX collapse. So again, show of hands, how many have heard about FTX collapse? Wow, I think the crypto thing. So FTX collapse, of course, for benefit of others, it was an exchange. Maybe imagine this, right? Let's say you had put money in HDFC stock through your broker in NSE. And let's say you were holding 10 lakh rupees of HDFC stock. And then suddenly imagine NSE crashed and all your money is gone. Okay, so this is what happened in FTX, equivalents. That people were storing in the good faith that FTX is an exchange, investing money in bitcoins and other cryptocurrency. And one day FTX collapsed. which means even if I invested in a very stable, maybe cryptocurrency like Bitcoin, there was nothing. My entire savings were gone. So, I mean, if you imagine it from the point of view of that consumer, this is a hugely painful experience. And now what's happening in crypto is that there is a complete lack of trust in crypto. People are saying crypto is not real, we should not invest in crypto. People are now taking out money from all the exchanges. So one collapse of FTX is leading to other exchanges also collapsing, which is in technical terms called bank run. So in some ways exchanges are facing that. And now you know why there's regulation, right? Imagine if this was to happen to NSE. The entire financial system will collapse. People will pull out all their money from NSE, the stock prices will go down. If I am a business owner in, let's say, HDFC, and my stock is plummeting by 60%, I don't know what to do. What will I run a business on if the stock price is no longer viable? So it is moments like these which explain why regulation is required, because regulation leads to trust in the financial system. As a consumer, as a borrower, as a participant, you can trust that there wouldn't be anything funny going on. And that itself is the most important aspect of regulation or compliance. Even closer to home, right, there are a lot of frauds that are happening. One of the most popular fraud that is happening now these days is this OTP KYC fraud. It is actually a very so this used to be a very small phenomena. It used to be a very minor phenomena. But because of the way Aadhaar eKYC came in India, it brought a lot of good things, that there was frictionless KYC. But one of the big frauds it started is actually an OTP fraud, where on your phone you will get an OTP. Somebody will call you and say your KYC is expired. I was getting this example that your KYC is expired. You have to redo a KYC. Please give me the OTP. And you will feel that, okay, my KYC is expired in this bank account. My bank account will be frozen. I should give this OTP. And once you give that person that OTP, suddenly 1 lakh rupees from your bank account will go away to that guy. Because what that person is doing is, that person is using your knowledge that you know that there's an Aadhaar eKYC OTP, but actually using payment rails of NPCI, which are OTP based. So he knows that you know that there can be KYC using OTP, and using that information to actually fool you into giving a payment OTP to you. And that this is was small, but what happened is actually this blew up because one actress actually one day on Twitter put that she was part of KYC fraud, and that truly blew up. Now it's gone to ministry, and there's a lot of action happening at the central level. In fact, as you can see, Telecom Ministry in its latest draft circular on the new bill has said that they will be doing a strong KYC on phone number. And when you get a call from a phone number, you will get the name as per the actual KYC that is there in the records. So as you can see, the regulator kind of tries to prevent fraud, right? That's the prime action of regulation, at least operative regulation like KYC and AML, is to prevent frauds. And why preventing frauds is important is to stop things like FTX and destroy trust in the system. So again, I mean, we can talk about many examples, and we can take questions also, but I am hoping I have made the point clear why regulation is very important to financial ecosystem. I think Kshitij was saying that finance is about flow of money. Regulation maybe is a hurdle in the flow of money, but it's a important hurdle, necessary hurdle. The good news, or at least the reason why we should all be extremely happy, is that the Indian regulator is actually one of the most innovative regulator. And while the regulations are consistent globally, there is KYC globally, there is AML globally, Indian regulator is taking extreme steps to ensure that there is technology making it easy to follow this regulation. There are a lot of technologies. I'll just talk about 3. All of you know about eKYC, right? Aadhaar based OTP or biometric KYC. I'll not talk more about it, but there are 2 other regulations which kind of 2 other technologies that the Indian government has done. One is vKYC and the other is eSign. And both of these actually are fundamentally different from how the world has done it. What these 2 regulations will allow is that you don't have to visit a bank branch and you don't have to sign a single piece of paper in your life. So let's start with first video KYC. So actually what used to happen is that in banking regulation, there's this term called IPV, in-person verification. And lot of regulation globally uses this term. Reason for this IPV is that let's assume that I have your Aadhaar data. So I have your Aadhaar document. Somehow I have scammed your phone also. So I'm able to actually get that OTP from Aadhaar. Then I can on your behalf open any account. I can on your behalf go and modify any account. And hence there is this additional layer called IPV, which means that the bank in person has verified that the user who was giving the KYC and the user who is coming to the bank are the same. Okay? And while you may not have known, but whenever the bank would have said ki sir branch aana padega, yeah, the RM would have said I'll have to come to you, is because this regulation used to be applied, which means in person some bank official has to see your document and has to see you along with the document. Now what the Indian regulator has done, and of course technologically all of us know we do WhatsApp calls, video calls every day with our friends, right? So what the Indian regulator has done is just simply take that technology and said ki why don't you do in-person verification over a video call? Something as simple as that. And this hence has suddenly allowed this entire IPV concept to come on video. And it seems like a very small change, right? The regulator has, just made IPV over video. But the implication of it is profound. Implication is that any bank no longer needs an in-person visit. Every in-person visit can be replaced by an IPV over video. And also there are other frauds that of course will happen over video. So the bank has also ensured that you do checks, etc. The cost of onboarding the users as a result has come down by 80%. Because earlier what used to happen is you used to go to a branch, that branch guy is not there. So you will visit, he will say, Acha, now come tomorrow because currently that ops guy is not there. The branch guy used to come to your house, you are not there at your house. So this multiple frequent visit was a very heavy cost. So as you can see, the cost has come down from 300 rupees to almost 50 rupees. And even it's projected to go down even lower. And as a result, when we talk about financial inclusion, right? Financial inclusion means nothing but simply that more and more users can come into financial system. So now if you're bringing down cost from 300 rupees to 50 rupees for onboarding a new user, it means now you can also onboard users who are in remote part of the country. So let's assume you don't have a branch in Arunachal Pradesh. You can still onboard somebody from Arunachal Pradesh onto your bank in just 50 rupees versus today or maybe before this technology, you had to open a branch there. So the cost of doing banking in a state was at least you should have 10-15,000 customers, only then it made sense to open a branch. Now as ICICI famous ad says, your phone is their branch, right? So it's a profound small change but is leading to profound changes in both regulation and financial inclusion in the country. The other is Aadhaar e-sign. This is one of the technologies that was initially brought along with KYC. So this has existed for almost since 2012, but only recently there has been a change in the section 3 of IT Act. Okay, now this is getting very technical, but I guess given you guys are students, it should be a little bit technical. So what the problem that has existed in digital signing in India is that in US, digital signing is principle based, which means that as long as you can defend it in court of law, the government doesn't really care how do you sign. And they have a definition for digital sign, which is as simple as saying, as long as the encryption is, they've defined a standard of SHA-256, as long as the encryption is that, we are fine. We don't really care of how you're doing it. But in India, the issue was that the IT Act specifically one defined what a e-sign was. And the second was it limited it to certain instruments. And for example, your deed, you could not sign your deed using an Aadhaar e-sign. Similarly, you could not do a digital sign which was non-Aadhaar on loans. So there were these issues that existed in the IT Act. So what government did is very recently they've made a change in IT Act, and now which means any sign, right? And this is the again most forward-looking position globally. Any sign, whether it's property, whether it's deed, whether it's will, any and every sign now can be done digitally using Aadhaar e-sign. And to be frank, this is not even there outside India. This is the most forward-looking regulation globally. Yeah. So, and also I didn't say it. Please feel free to ask questions at any point in the presentation. So earlier, one of the issue was that you could not sign negotiable instruments. Property is such an instrument. Now what the regulation is that you can sign any and every document including negotiable instruments through Aadhaar e-sign, which means you can sign property also, you can sign will was also a big issue, you can sign even will through Aadhaar e-sign. So this is a very recent regulation, has come in the last 3-4 months. It will fundamentally change. You will see these changes in your next 5-10 years. You will see a lot of startups coming on who are building their use case on, let's say, property signatures. So this will again lead a complete different digitization in the country, again led by the regulator, unlike other geographies. And of course, yeah, please. Yeah, that's a great question. So, how Aadhaar e-sign works is, or let's go a little bit back, right? So, let's go to the concept of what is a sign. In fact, SignZ's name is SignZ, right? So, our first slogan was signing made easy. Now we have moved from that, but we had done a lot of research on signing as a concept, right? So, if you look at signing starting years and years ago, right? Sign was a seal. People used to put their seal on documents, which means signing means I am identifying myself and I'm consenting to what is written here. So the two important fundamental points in a signature is you should be able to identify who is this individual, like going back, seal, then thumb impression. The entire concept is identification and consenting, that I'm consenting to these terms. That's why you will see bankers always, when they bring a 40-page document to you, they say sign every page, right? In that also, if there are some critical term, they'll say sign out this critical term. Because when they go to court and there's some page signed missing, the party can challenge that I didn't consent to this page, he has put this page in the middle. Okay? So therefore, signature as a concept, right? Whether whatever is the technology, whether it's a physical sign, whether it's a thumb impression, whether now it's Aadhaar e-sign, has to solve for these two things, identification and consent. Okay? Now, the beauty about Aadhaar e-sign is, Aadhaar is linked to your identity, right? So as long as you develop a signature over Aadhaar protocol, identity is solved for. How consent is solved is the same way that you get Aadhaar eKYC. In Aadhaar e-sign, a contract comes on your screen. Within the contract, once you read the contract, an OTP comes. If you input that OTP, same like you get Aadhaar eKYC data, you now get a signature from Aadhaar, which is linked to that particular document. Okay, now this is also again going to get a little bit more technical, but let me go to the technical part. So in technology, there's this concept called hash. So what this concept is that if there is any document or message, it has once you convert it through an algorithm, you can create a hash, which is an identification of this document. So if you change anything in this document, this hash will change. Okay. So now what Aadhaar e-sign does is that when you are asking for a new Aadhaar KYC, it sends this document hash to Aadhaar. Okay. Aadhaar stores this hash and sends you back a signature. And as a user, when you input the OTP on this document, the signature you're seeing. Okay. Tomorrow, let's say somebody changes something in this document, then that hash will not match and the signature will fail. Okay. So you cannot change anything in the document because it is, in technical terms, you are encrypting the hash, but the way to think about it is that you are making this totally non-corruptible document and you are signing using user consent, which is OTP. So that is how this is a very, very powerful way of signature. The issues that bank used to face, right, all the time in lending, that I have not put this is not my signature. Then we'll go to forensic lab, he'll say, I have not signed this, pen color is different, all that stuff is gone, right? Because nobody, neither the bank nor the consumer can change this document, whatever it is. And identification, again, entire digital trail exists with Aadhaar. So as a result, it is again globally one of the most beautiful protocols, simply signed using OTP. Like unlike you signing 50 pages, now you can sign 200 pages also with a single OTP. And again, non-corruptible. Yeah. If he has Aadhaar, yes. Okay, that's a good question. So, okay, so again, one more concept. So, we described signature. It is based on two things: identification and consent. The third concept is contract. So, what is contract? Contract is that there are two parties, right? In loan, there are two parties. There's a borrower and there's a lender, and they've agreed to certain terms. So, the contract law actually has not been changed in India. Even globally, contract law has not been changed. But contract law supports this, even it's 18, like this is a 1860s version, like which is 160 years old. Even that supports this protocol. Why? Because in contract law, I forget there's a Spanish term, but basically what it means is that even verbal agreements are agreements. So once you have proved that you and I have agreed, it is a binding contract by definition globally. Okay, this is like this. I think I forget the Spanish term, but globally all contract law, that is the fundamental principle. So hence an Aadhaar e-sign is even defendable globally because there is proof that you both have agreed to terms. Therefore, Aadhaar e-sign hence is a beautiful protocol because it is not linked to India or India alone. It by definition kind of applies to everyone. Yeah. 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 Yeah, I mean now this is even more technical, but in what so this okay, so Aadhaar e-sign again relies on this technology called digital signature certificate, DSC. Now DSC is not something new. They have existed for 20-25 years. Like if any of you have opened a current account or have become director in a private limited, yes, you would have used that hardware to do DSC. Now in DSC technology, there is a concept of multi-signers. Okay, so when you sign the first document with the signature, this message has now become document plus sign one. Okay, so when it goes to second signer, it is document plus sign one plus sign two. Okay, so as long as you maintain order, you can do multi-party sign. And you can trace that signature fifth was on a document which was, document plus sign 1, sign 2, sign 3, sign 4. So there is other ways also, but simply this is one way you can do it. And Aadhaar e-sign has not solved it. That's a solved problem in DSC in general. Yeah. हाँ OTP नहीं आता होगा उसको फ़ोन पे. Yeah, so I think the point and great, I mean good that you all guys asked these questions because it kind of demonstrated how advanced technologically India has become, okay, in what it has done. And this is the slide is that, right? So you go to US. US's main verification method is SSN. And it's so funny that SSN neither has a OTP base at all. So there is no user consent. It doesn't even have user face. So there is no biometric data in that database. There is huge number of SSN frauds in US, which means I can go on your behalf and say that this is SSN. The way they try to protect against SSN fraud is that they'll ask you questions. That, when you spend these $2 on this Amazon, where were you located? Because they don't have any true biometric database. They have no phone numbers linked. So their way of protecting fraud is they ask questions on your history. Imagine how backward they are in terms of their KYC. Similarly, in video KYC, they have no such regulation. In US, you still have to go to a branch if IPV is mandated. The user still has to come to you if IPV is there. Similarly, in e-sign, as I said, they have a very simplistic technology or they have a simple regulation. As a result of which a lot of instruments in US cannot be signed. So the example was being taken mortgage. Mortgage cannot be signed in US through an e-sign because they haven't got to this level of technology innovation that they can stop all fraud. So the regulator has not agreed to sign a lot of negotiable instruments using e-sign. So we are at a stage in evolution where at least technologically, and I'm sure other panel will talk about other banking technology, but at least in regulation, something I understand deeply, we are far ahead of US or any other country for that matter. And again, thanks to regulators. So I think before, and this was, I think more to do with India, but globally also a lot of advances are happening. Around largely these four things, face match. This is again a technology which you can call AI or whatever, but basically tries to replace humans' ability. Advanced forgery check. So again in back office, what used to happen today is whenever you send documents, people in the back office used to match documents data, match your face to the other document, see if the document is genuine. And now again it's being done through algorithms. Video forensics. So given that now video is coming as a data feed, like in India video KYC, you can still do video frauds. We'll go deep into this. And address geocoding. So if you're claiming I am in a certain city, in a certain town, you can use GPS geocoding data to kind of validate whether you are in that town or not. And these are regulated technologies. So they are being used in India, of course, but outside India also these technologies are being used. Face match, again, of course, is common now. I'm sure every one of you is seeing. But in China, this was the number one way they brought in financial payment inclusion very, very quickly. So any one of you who would have known this story. So unlike India where NPCI came in and you had all these OTP, in China what used to happen is you give your phone number and they take your face match and you get a payment done. So China used this technology as one of the most fast technologies to kind of get everyone on. And of course, face is one of those key biometrics that you cannot change, right? So you can change your PAN number, you can change your phone, you can change your email, but your face you cannot change. So this was a very, very powerful technology. When we are talking to regulators and other parties, we're realizing India will also now start adopting. Aadhaar recently has adopted face match for KYC. We'll see this in ATM, we'll start seeing this in payments. Yes, there's a question. Yeah, I'll come to that in video forensics, so you will get that. So this is again one of maybe things that is changing things very, very quickly. The other is advanced forgery check, right? So why this is super important is because today one of the reasons why there is slowness in KYC, people who face issues, is because somebody in the back end is manually checking your documents. Whenever you bring a manual check in any process, what happens is that process becomes batch, which means I can hire 40 people. So if I get 4,000 applications, those 40 people can process 100 applications a day. So now if I get 4,001, that one has to be now processed next day, right? So because of this, a batch process built. So even though it may take 5 minutes for the normal person to do it, but because of batch process, now it takes 2 days, because your batch moves to desk 1, then your batch moves to desk 2 on day 2. And what this technology is doing is it is checking for these things in real time. So it checks for Photoshop, it checks for whether the identity is original identity, whether it is a black and white photocopy, it checks for whether every emblem is at the right place. So it makes the same kind of checks that a human being would have done, but it does it in real time. Now the beauty of real time is you can expand to any scale. You can do 1 lakh checks in a second also. So you remove this entire issue of batch. So as a financial operation especially, you can then kind of process any number of applications without increasing your ops, right? So you don't have to wait for ops to increase. This has again been one of the most fundamental technologies which has allowed fintechs to scale very, very fast and do so many checks. If you talk to banks, every time they have to issue certain applications, they will first scale operations. But fintechs don't do it. Again, they have been able to use this technology to kind of scale to huge number of scale without spending much on building operations and fixed cost. To the question on deface and other things. So one, of course, there will always be frauds. There will always be some smart hacker who will be able to hack technology. But there are a lot of checks that you can build in. So in video forensics, what you try and do is that you try and establish one, of course, the face you are capturing is of the user, which is a face match. But you try and establish that this user is right now live in front of you. and giving you this video. And some of those are like, you check for movements, you ask certain activities to be done, and the user responds to those activities. You try and match voice against the voice you have in DB. You try and match whether it's a static photo risk. Static photo risk is that guy is placing a photo in a live video. And most of this is you have to, so there are two ways to do it. You can do passively, that algorithms are smart, but it always have risk. The active way to do it is that you ask the user to do something. So you ask the user to open his mouth. And based on that analysis, you kind of say, okay, this user opened a mouth, and hence, kind of is a live video. To the question on deepfake, yes, deepfakes are a real threat, and a lot of these checks don't protect against deepfake. But there is algorithms now being built to kind of predict patterns in deepfakes and then say this may be a deepfake attack in some ways. But again, there will always be some fraud that will happen. Okay, so till this point of time, my goal was to kind of make a very boring topic of regulation a little bit more interesting, and then also how as a country, as a startup ecosystem, we are extremely on the cutting edge of technology, and why all of you should be super happy about this, and maybe even from a career choice or even applying these things into your business, be super interested in this technology. I'll briefly talk about my journey and our startup's journey, and a little bit about our products also. I don't know how much time I have. Can I have a check on time? Okay. So we started almost 7 years ago. Of course, like all startups, from a small 1 BHK flat in Bangalore. And all three founders were like 2-3 years, out of college. And something beautiful happened in 2016 when we were very, very small. We had nothing. We actually won an RBI award for payment system innovation. And I still remember at that time, the combined age of us, as a startup, like we were, I think we were in our 29s or something, was less than the companies that were there. So companies of 30 year, 40 year were our competitor, and our own age was less than them, most of these companies. And this kind of really kicked off two things. One, it kind of gave us the confidence that if you're doing technology innovation, regulator will appreciate you. There will be an ecosystem appreciation, and kind of also gave other customers like banks, some kind of hint saying, you should go with these companies. And one thing led to another. In 2017, MasterCard also, maybe because of these awards, got us into US. We started getting exposure to different, sides of this problem globally. In 2018, we raised our Series A, which kind of allowed us to give us the capital to kind of build technologies. 2019, we launched a no-code platform. This, at least we believe, is still the cutting edge globally. In 2020, we started having 1 million API hits a day on our platform. API hits basically means transactions in some ways, from a technology point of view. 2020, we raised a series, another for about 8 million. Then 2021, we again, helped RBI in their retail scheme through their platform. Recently in March, we got a US patent for customer onboarding in AR, VR, in metaverse. August 22, we got an IFSCA license. Recently, we closed a Series B, and October we won, Best KYC Solution Award. So it's been a long journey, but a very, good journey. Very, as Vishal before me said, there are a lot of mistakes, but there are a lot of beautiful moments also that we truly enjoyed. Today we work with almost 240 plus customers across 6 geographies. We onboard almost 75 million customers till date. We have won a lot of awards and recognitions from Indian and global, companies. And our product, basically what it does is it allows banks to build customer onboarding journeys without coding. And why this is important is because while banks have to do KYC, have to keep changing their front-end journeys because regulator is changing, but they don't have the IT strength, they don't have that development skill. So what Sciency does is it allows banks to build full-fledged apps through a drag and drop mechanism without having to involve coders, and hence they are able to compete with fintechs in some way because they are able to get apps to market in the same time as a fintech would do, or else without no code they really were finding it very hard to compete. And I think some of the examples are that a large merchant acquirer was able to actually, as you can see in the graphs below, reduce dropout by 50%, increase customers, and all of this without increasing operation strength. Similarly, large public sector bank was able to use AI and almost to 99.2% technology. And today, as a result, it has been able to save almost 24,000 man hours a day. And I remember they used to have a team of 570 people, which has come down to 14 people because of this technology. So given I have lack of time, I will just kind of skip. So, and we work with a lot of customers. I think Kshitij was saying if I would maybe share or not share. So we do work with a lot of customers, both in India, as you can see, they're global brands as well. And yeah, our goal is to kind of become the go-to banking infra company, which banks and financial services choose as they are moving on this new journey from being branch-based to consumer digital-focused businesses. So thank you everyone for listening patiently.